So is there anything that you would advise people, apart from doing it as quickly as possible and getting advice, that they need to do around inheritance tax?
It's not a straightforward answer, but the crux of it is planning. Planning, and the simplest thing that you can do is create a will. Even if it is not a taxable estate and it is a straightforward, I leave everything to my wife or to my husband, it straight away, that is a tax-free gift to your spouse. And as I mentioned before, that probate process for those types of estate is essentially simplified and fast-tracked. So therefore, for a simple will, for a straightforward estate where everything passes to each other, that in itself will fast-track the whole process in order to deal with all the documentation, in order to there would be no inheritance tax to worry about straight away. So the simplest thing that you can do is to create a will. And of course, away from that, let's say that would be given to children or other family members, to charities. You can also, your will writer will create a will that is tax efficient, that is suitable to your circumstances, that takes into account the tax allowances. Now, of course, you should review that regularly because tax rules change. Governments change, bring other rules, chancellors change, bring other rules. So those things do change along the way, and you do have to double check whether that is still relevant, whether it still works for you. So we say definitely review your will every 5 years, or sooner if things have happened where you perhaps received an inheritance. So for example, if you received an inheritance and that bulks up the value of your estate, and all of a sudden you think, I'm outside of my allowances, my estate would have to pay tax. Straight away look at that inheritance and say, do I need it? How will I use it? Or perhaps I want to pass it along to my children. If I want to pass it along to my children, there is a way of creating what is called a deed of variation of a will, whereby you can bypass your estate, and that inheritance that you receive perhaps from your parent can be directly gifted to the grandchildren from that estate. So there are various aspects that you can do in order to mitigate the flow of assets and all the tax allowances that you would could be able to use at any time. So planning is crucial, making sure that you keep track of those allowances and utilize them fully. So for example, on lifetime giving, that if you don't want to grow your capital, you make sure that you take advantage of the lifetime gifts that you can give to your children every year, that if you don't spend all your income, that you also make gifts out of your income every year, and gifts of for weddings, and perhaps some gifts for birthdays or special occasions for graduation. Any additional gifts that you will make will be outside of capital and continue to reduce the size of your estate to keep within those tax-free allowances. And of course, things like taking out an insurance policy and writing it into a trust so that it stays outside of your estate, or things like pensions, that you have an allowance that you should utilize every single year that you would place into a pension, and the pension pot can then be outside of your estate directly for your beneficiaries straight away. So again, it's planning, taking advice, whether it be from your legal advisor, whether it be from your financial advisor, to keep track of your estate and to make the use of all those tax-free allowances that are available to you.
Donata, thank you very much. I think the takeaway from that is everybody make a will.
Definitely. Thank you, Karen.